What's up, ladies and gentlemen? It's Zambia's finest trader, Blissbilliondollar, and today I'm back with another episode of Ask Blissbilliondollar. And of course, this is a time where you get to get expert advice on forex trading. So you basically ask me questions, and every Friday I take time to respond to all these questions, and I hope some of your questions will be responded to. So in case you haven't watched the first episode of Ask Blissbilliondollar, the link is going to be in the description below, as well as maybe somewhere on the corner. But today it's another episode and I'm going to go right into it. All right. So the first question comes from somebody that has been trading for 2 years. And their question is, how can I make Forex my full-time job? How can I make Forex my full-time job? Here's the thing. When you are starting with Forex, you have to start with the goal in mind that it's eventually going to be your full-time thing. If you are to ask me right now, Forex trading is my full-time thing. But that doesn't mean I do not have other things that I do, right? Now, how can you make it your full-time job? Well, first of all, start with making the decision that it is something that you are going to deal with. Come rain, come sunshine. In the losses, in the days where you do not make money, in the days that you make money, you're going to stick to it, right? It's very easy. Just as easy as that, ladies and gentlemen. Just make the decision to say Forex trading is going to be your main thing. But if you are coming from a point of where maybe you're already employed, formally employed, right? And you want to transition and become a full-time Forex trader. Well, I wouldn't advise that you quit your job immediately and then just focus on Forex. Although other people would do that, but I wouldn't advise you that because you haven't reached a point where you're already consistent, right? Unless when you reach at the point where you're consistent, you can make good profits and like, okay, you know what? If I'm able to just give it a little bit more time, I'll be good, right? So this is dependent on whether you're already employed or not. But that is the small advice that I'll give you for now. I mean, you can always follow up with the question next time. And in case you want to ask the question, I'm going to leave the link to the questions in the description so that you get to ask me questions. Now, ladies and gentlemen, this other question is coming from somebody that has been trading for 4 years, at least they say 4 years. And the question is, how can I achieve discipline and patience in trading? I have struggled in this area of my trading, right? How do you achieve discipline and patience in trading? First of all, it starts with outlining your goals. What is it that you want to achieve at the end of a trading session or whatever period, right? And then it also comes down to how you trade, right? So before you trade, formulate a strategy of rules that you'll be following when you are trading. For example, come up with what confirmation you'll be looking for when you trade. Write them down. And as long as those things are not met, you do not take the trade, right? It's about building discipline, right? And as you do that consistently, it now becomes a part of you, sort of a good habit, and then you become a disciplined trader. If you say, in a day, I'm not supposed to take 3 trades. You're only supposed to take 1 trade in a day. When you take a trade, whether lose or win, leave it and you're done for the day. Remember, you're building discipline. And how you build discipline is just a matter of compiling these small activities. And at the end of the day, they become a part of you, right? Now, how do you build patience? Patience is something that is very important as well in trading. But how do you build it? 1, define your goals. Then 2, define what things you'll be looking for in the market. And as long as those things are not met, don't take the trade. Sit down, relax, look at the market, watch a movie, or, do something fun. Very easy. Don't rush into entering a trade that is not confirmed. 1, it just shows you are not disciplined, and it shows that you are impatient. Wait until you have the entire confirmation of the trading setup. right? So that's about building our discipline as well as our patience, right? So now, ladies and gentlemen, this other question is coming from somebody who's been trading for 2 years now. And their question is, how do I develop a proper risk management? Ladies and gentlemen, risk management is a very important factor when it comes to your trading. It defines you on whether you're going to be profitable or not, right? So risk management, proper risk management. First of all, outline your goals. What account size do you have? Let's give an example of maybe $1,000. If you're starting with $1,000 and you say, I'm going to be risking only 1%. 1% of $1,000, how much is that? So what it is that one, if you are going to take a trade and you're only going to be risking 1% on a single trade, so meaning from the $1,000 that you have, you're only going to risk 1%. And now, remember, we're talking about proper risk management. How now do you look at the reward? Now, here is a formula that I use. For every 1% that I risk, I always aim for 3% of what I'm risking. If I'm risking $100 on a trade, I should be able to make at least $300 on that trade. If that trade does not qualify, or rather, if I see where my TP is and does not qualify to give me 3 times what I'm going to risk, I'm not going to take the trade. At the end of the day, it's about discipline, patience. Remember, trading has been there before you, before your parents, before your grandparents. It's been there for a long period of time. And therefore, if you miss one trade, doesn't mean you're going to miss even tomorrow. There's always another day to trade. So remember, every time you're risking, have a goal in mind. If you're going to risk 1%, at least aim for 3. And that is the advice that I would give you when it comes to proper risk management. And also, ladies and gentlemen, if you're going to build proper risk management, ensure that you stick to the rules. Don't overtrade, right? Don't overtrade. Then secondly, don't revenge trade. Don't let the emotions get in the way and end up making you overtrade at the end of the day. It will mess up your account, it will mess you up, and at the end of the day, you forget about your risk management. You just be trading because you've lost money or you want to make more. Ensure you are disciplined. So risk management goes hand in hand with discipline as a trader, right? Very important question. I'm glad that you asked. So the other question, ladies and gentlemen, this person says he started trading this year and he's still learning. Well, first of all, congratulations that you started learning Forex trading. It is a very good thing. It can help you make some good money. And of course, ladies and gentlemen, yeah. So what is the right path for someone like me who looks forward to be able to trade consistently without depending on signals, but at least being able to make profits, small losses, or break-even point after trading? So what is the right path for someone like you who just started trading and you look forward to being consistent? First of all, do you have a mentor? I have a few questions that I need to ask you. Do you have a mentor that you're following? How is that mentor that you're following? How consistent is he or she in terms of trading? How good are they, right? If you are learning something, that methodology that you are learning, what are the statistics in terms of profitability, right? Once you answer those questions, and I'm going to base this answer based on the fact that the response is positive, meaning you have a good mentor, he trades very well, he's consistent, and he's highly profitable, right? Now for you, as someone who will be following in his footsteps, so if you're going to be consistent, ensure that one, you stick to one trading strategy, right? If it is working for someone, chances are that it might work for you. In trading, that's how it is. It's about how you apply the information, right? Chances are that it may work also for you, right? So stick to one trading methodology and then ensure that you have a proper risk management. Ensure that you are fully in charge of your emotions. Don't let them get in the way. Remember, there is always another day to trade. Your aim in trading should be about capital preservation. Once you preserve your capital, you can trade another day, and another day, right? So that is a short response I can give to you as someone who's just getting started with trading. Okay, so this person says they have been trading for 9 months now. Congratulations to you. And says, I'm a smart money concepts trader, but I have difficulties when it comes to top-down analysis in smart money concepts. I would like you to explain for me how I can go about it. So it depends on a few things. One, what kind of a trader are you? Are you a day trader, position trader, scalper? What kind of trader are you? You can use, I believe, price is fractal, meaning an order block on the 1 minute time frame is still an order block on the daily. The criteria you use to spot an order block is the same regardless of the time frame. So now, top-down analysis. First of all, you understand the kind of trader that you are. If you're a scalper, you definitely don't need the daily time frame, right? Because you're just going to be in the market for a very short period of time. But I'm going to give an example as someone like me who's a day trader and I also scalp. I'm going to give the the response based on that. So how would you go about it? First of all, this is how I go about it. I start from the daily time frame. I determine the daily bias, right? If you're a smart money trader, you should know how to determine the daily biasness. Now, there are different ways depending on who taught you smart money concepts. There are different ways to know the bias of the day. And then after you check for the daily time frame, you come to the H4. The H4 you also check. You find possible turning points of the market, possible areas of retracements, you see? And then after you do that, maybe you can even start spotting possible entry points. Now, as you find those entry points, let's say you have determined where an order block is. So now you can go to lower time frames like the H1, M30, or M15. Now, what are you going to do? In those order blocks, refine them and find an order block within an order block, right? And then what it means that you've refined that order block and you're going to base your entry based on the lower time frames, right? Basically, that's how I go about it, and I've been very consistent in trading. So when I give you advice, it is something that is definitely working for me. But remember, there isn't only one way to kill a mouse. You can always use different ways, but basically that is how I go about it, right? Yeah. So anyway, the next question comes from someone who's been trading for 2 years, and their question is, how do you confirm your entry when trading boom and crash, right? So smart money concepts is smart money concepts, whether boom and crash, or whether on boom and crash or currencies, whatever that you're trading. An order block is an order block regardless of what you're trading. So how do you confirm your entries? So I do not know how you trade, if you use price action or if you use smart money concepts or you use indicators. I do not know, but I'm going to give advice based on how I trade. As you know, I trade smart money concepts as well as price action. So in smart money concepts, there are certain things that I look for to verify my entry. For example, price needs to be in an IFC, and that IFC would have been refined. And if I'm looking to buy, above that IFC, there should be an FVG, fair value gap, or some imbalance, should I say. And then once price stops in my IFC, I need to wait and see a change of character and then a retest in the newly formed IFC, and then I'll enter. Basically, that is the entry model that I use, be it on boom and crash or whatever that it is. On price action, it's totally different, because price action, I'm not combining, IFCs and whatever. Those are part of smart money concepts. So price action is a little bit different, but basically that's how I trade boom and crash, and that is how my entry model always has been, right? Yeah, it is very easy, right? So the other question, ladies and gentlemen, comes from
somebody who's not yet trading and they are yet to start trading, and their question is, how do I learn and start trading? So first of all, if you intend to trade, find a mentor. A mentor is someone that is consistent with trading, basically someone who has the results that you admire. It's the right way I can put as a mentor. Remember, when you are looking for a mentor, there are people that can package themselves. They are not real traders. They do not even know how to trade. Therefore, you are following someone who doesn't even know where they are going, right? But someone with a proven track record of results will always speak. I can guarantee you that. You can never hide a pregnancy, forever. It eventually shows. So you're able to tell, someone who has real results and someone who doesn't. And of course, someone that has been where you want to be. That's someone you can look for as a mentor, someone that is going to have it, time for you. So first of all, find a mentor, and then how you're going to find a mentor will also be dependent on the method of trading that you want to be using. Is it smart money concepts? Is it price action? If you're interested in smart money concepts or price action, I've taught a lot of people within my country as well as outside the country, and they're producing massive results. You can see they're able to replicate. And feel free to reach out to me and I can show you the way. In case you are wondering, right? You can always ask around about me and people will tell you. All right, and the next question is coming from somebody that's been trading for 4, and they only indicated 4. I don't know if it's 4 months or 4 years. And the question is, how do I understand fundamentals? Can you teach me all there is to learn on fundamentals? Well, so can I teach you? Yes, I can, right? You just have to get in touch. Although right now I'm not teaching, so I only teach 3 times in a year, so just look out for when I will be teaching. So how do I understand fundamentals? So there are a lot of things that come, or rather that you need to understand on fundamentals. First of all, begin by understanding what type of event you're trading. For example, different events are affected by different things, right? So you can't assume one factor that affected NFP will also affect PPI, or will also affect, the other fundamental news that you're going to be trading, right? And remember, what affects a particular currency pair is also the happenings in that country. Now, I trade mostly US news, right? And now, if I'm going to trade maybe something about employment claims or maybe NFP, you understand that there are different things that affect those fundamentals. Once you understand the things that affect the fundamentals that you're trading, the news that you're trading, now look at those things. How have they affected this? What effects do they have on the currency? For example, when we had COVID, right? A lot of people lost their jobs and all that. What did you think happened to, when it comes to trading NFP, right? What do you think happened when it came to, unemployment claims? You see, so those factors affected how that currency was performing at that particular time. So there are different things that you have to put into consideration whenever you trade a particular news event. NFP will have its own things that you have to look at. PPI will have its own things and all that. And then look at the economic growth of that country that, those things are happening from. All right. The next question is coming from someone who's been trading for a year and some months. And the question is, how do you get over the fear of losing a trade just after making a big loss? So what you're experiencing is something that is very normal. I've gone through it, and maybe other traders have also gone through it. But how do you get over it? Well, you need to understand that you can't define yourself based on one loss. If you've been having a good winning streak and then just one loss and it affects your entire trading, it's not right. Look at the moments where you've been able to consistently make money and let those define who you are as a trader. Remember that every trader will make losses one way or the other. We all make losses, but just ensure that you preserve your capital, because the first thing into trading is capital preservation. Ensure you can preserve your capital. You don't reach a point where you risk it all and you lose it all, whereby if you only lose one trade and you've lost it all, that is not so healthy for a trader. So don't define based on your losses. Let them be lessons, but define yourself on the many wins that you are going to achieve and those that you have already achieved. Matter of fact, I think it's just the right way to look at things, right? Yeah, so that's what I can tell you. And then we're going to go to the next question. And now this question is coming from someone that's been trading for they just said 2. I don't know if it's 2 years or 2 months. And the question is, how do you get consistent in trading? First of all, ensure you have the right strategy, right? Ensure you understand the strategy very well to the core, right? Secondly, ensure that your risk to reward ratio is on point, right? Then third thing is that ensure you have the good psychology. Don't just get messed up by one losing trade and then all of a sudden you want to start revenge trading and all that. Be disciplined. Have rules set, or rather put in place rules that will define when you enter a trade and when you have to stay away from trading, right? And overall, lastly, ensure that you are putting a few things in place, such as what kind of a trader are you? Are you a scalper? Are you a day trader? And all those things, right? So finally, ladies and gentlemen, the last question for this segment, and it's a question that is coming from someone who's been trading for 2 years, and he says, how do you read the direction of economic news before it comes out? Like I mentioned in the previous question, one, you understand what kind of event you're trading. Look at the things that affect that particular event. If you're looking at unemployment claims, look at it, definitely talking about unemployment. What country is it? In the US, if you trade US based news. And then look at the articles. What is the news saying about about the employment rate in the country, right? What are the projections? What is the sentiment of investors? You can find all this information on investing.com or Forex Factory. You can always, these are free websites as well as an app, and this information is there. And then from there, you put a few things in place and you make a decision to say, okay, I believe because of this and this and this, the dollar will be gaining or will lose in this case. Ladies and gentlemen, there you have it. It's the Ask Bliss $1 Billion podcast. In case you are not subscribed yet, ensure you join the gang, right? Subscribe, hit that bell icon so that you do not miss anything. And of course, if you are looking for a reliable broker, ensure you trade with nothing but the very best in the industry. I'm going to leave the link in the description of this video, and I hope you have a great trading week, and I'll see you on the next segment.